Good morning and welcome back to another opportune week in trading. This is the market forecast. I'm John Hoagland. Thanks for trusting me with your time. Monday, March 1st. Hard to believe. Through the first 2 months of this year already, the last month of the first quarter here. As always, we're going to be looking at these markets in context through the lens of risk management. Starting with the eco numbers this morning, we've got a couple of talking Feds early this morning, 8:45 a.m. Central Time this morning. The PMI Manufacturing Index due out. 9 o'clock, the ISM Manufacturing Index due out, as well as construction spending. Looking forward as into the rest of the week this week, not a lot going on Tuesday as far as economic numbers are concerned, but we have the EIA Petroleum Status Report 9:30 a.m. Central Time on Wednesday as usual. The Fed's Beige Book comes out at 1 o'clock on Wednesday. That's the sign that we are 2 weeks out from the next Fed meeting. Boy, they sure seem to be coming up quickly. As for the rest of the week, it's all about unemployment. We've got jobless claims on Thursday and the unemployment situation numbers on Friday. So a lot of focus later on in the week as far as unemployment is concerned. I hope you had a nice weekend. I hope you're ready for another exciting week this week. Last week we had some down times here in our equities markets, but they're higher this week so far after some good news from Johnson & Johnson's COVID vaccination being approved by the FDA. COVID relief bill gets closer to being passed. Bond yields have settled down a little bit, so we're seeing some positive numbers in our equities markets this morning. As far as crude prices are concerned, they're up a little bit, but still kind of range bound, just kind of looking for new information. Iran has rejected the opportunity to have some talks with the U.S., and we've got the OPEC Plus meeting on Thursday. So crude markets looking for new information. As far as earnings today, I see my brothers in the room. Middleby Marshall, a commercial food service manufacturer. They make a lot of pizza ovens. Their earnings came out today. Both of them expected, both of them better than expected in earnings per share and overall revenue. We have Zoom, everybody's favorite work from home meeting tool, due out after the close. We've got a lot of retailers coming out as the week goes on. Not a big list of numbers today, but we've got a lot of, again, retailers coming out as the week goes on. As usual, we like to look at the VIX. VIX is down 10% this morning off its close on Friday. It's 25.03 last time I checked, and the dollar index 91.06. Well, I guess it is moved confidently back above that 90 level. As usual, make sure you like, share, comment, question, feedback, and heckling are always welcome. I had some stable charts here, but apparently they're going to wrestle with me a little bit. So let's say good morning to everybody first here. Then we'll get down to the charts. Ralph, first one in the room. You win the prize this morning. Good morning, Ralph. Good morning, Prophet Eon. Good morning, Rick. Will, good morning, Murph. Hope everybody had a good weekend. Yes, it is time to get back to work. Felix Escobar, good to see you. Brian, Bill, Tanya, Clarence, Taurus. Good morning, Clarence, Rod, Bulldozer, Rob, John, Torres. Good to see everybody. Yes, good. Hope everybody is safe, and we're looking for some much success today. Mason, good morning. Good to see you. Ray Gunslinger. Brian Walters, Art, Danny, good to see you. The chef is here. Mike, good to see you. Shady Trader. Mind Over Markets, good. It is a fun read. It is a great book. I'm glad you're enjoying it. To me, that's been the Bible for the last 30 years. Andre, Troy, Trading Research, Chris, Ed Nilsson, Silva, good to see you. Rocker, good to see you. And Oleg, as always, make sure you like, share, comment, question, and feedback. And, of course, good heckling is always welcome. I want to throw the link for this week's group coaching on Wednesday at 1 p.m. Central Time. Next week, we'll have group coaching as well as the good Dr. Menaker coming in for market therapy. That's not this Wednesday. That's next Wednesday. That's always at 3:15, markets are over. Dial down, relax, and listen to the good doctor. All right, I'm going to get my charts back up here. It looks like we're going to have a little bit of a fight with them this morning, but we're going to get through this. Let me get this back up here, and let's move on to... All right, here they are. We got them. Okay, so daily and crude. Friday looked like a pretty much of a profit-taking event. Okay, we had a weekly kickoff high of 64.80. I was thinking about 63.80, but I got a little bit too aggressive to the upside. So this week's weekly kickoff high is 63.80, low 59.60. We lost about 2,500 in open interest on some pretty decent volume. Kind of leads me to believe we had some profit takers come into this market on Friday, take some of their positions off in a profitable manner. Today we've got inside say that 10 times fast. Inside extended trading hour range. This market is seeking new information, and there's a lot of information out there for it. API, EIA, OPEC meeting this week. Take a look at the 30-minute chart, see if we're seeing any opportunities early in the session here. Settlement is down here, 61.50. We had some pretty aggressive buyers on the news that Iran was not going to be settling down to talk with us anytime soon. But those early buyers have now reconciled and moved price back down towards settlement. We're kind of opening in range near inside value. I'm going to suggest trying to stay patient. We've got a little bit of a push down towards settlement. This looks like a pretty decent and a kind of a high target area, or a target rich environment, as I like to call them sometimes. At the low here, with the low of Friday just below that, with settlement right here. So I'm going to try and stay patient and look for opportunities when as the market kind of goes along here. I'm not seeing that we're leaving the opening range at either extreme, the high or the low of the session. So I'm going to stay patient and look for opportunities as the day goes on. Mondays are usually slow starters for me. Historically not all that great when we open on Monday. I like to let the landscape kind of open up a little bit for me, and I'll look for opportunities as the days go on. Anyways, E-mini S&Ps, 38.58 was our weekly kickoff low last week. Some pretty decent opportunities off it. It's our weekly kickoff high this week. Weekly kickoff low, 37.12, right down here. I put these percentage numbers of pullbacks not to scare people, just because I like to know where they are in case they come into play at any time. Our overnight high, pretty close to that weekly kickoff high, 38.57, within 4 ticks of it. So we're starting to see a little bit of possible resistance at that level. Might be useful for us today. Strong volume and open interest gains Thursday and Friday indicating some new shorts coming into this market. We had this weekly kickoff low here get taken out here on Thursday. Friday it was the high. We saw 2,500 in increased open interest on Friday after a 59,000 contract boost in open interest on Thursday. Now we're seeing a little bit of a pullback to a possible area where we might see some resistance. Look at the resistance we saw here before. Look what we might be kind of starting to form. We haven't really set up a neckline here for a head and shoulders, but it looks like we may be running into some resistance up at that level. Watch that 38.58 level early this week. It might be very impactful and helpful for us. All right, so here we go. The 30-minute chart, overnight longs, settlements all the way down here at 38.09. We're kind of holding at the upper part of Friday's regular trading hour session range, and again, we seem to be testing and bouncing up against that 38.58 level. I just lost the charts. I'm going to get these back up here very quickly. I do apologize for this. It just seems to be happening at random times, and we're going to see if we can't get this ironed out here. It should be back up here, and here we go. So again, 38.58 going to be kind of pivotal for us today. when we see that we've kind of brought in a whole bunch of potential new shorts in this marketplace, I begin to wonder if they're getting a little bit too short and maybe we've got them a little bit trapped. As we all know, the S&Ps have been grinding and eating shorts for as long as they've been trading. So if we can't hold below this weekly kickoff level, we might see some of the shorts that we think may have piled in over the last couple of sessions get a little bit nervous. NASDAQ. All right. So the NASDAQ is same but different. Okay. We had some strong volume and open interest gains, open interest losses actually yesterday, Friday, I should say. We've set up a neckline now for a potential head and shoulders formation. We've got our shoulder, we've got our head, we've got another possible shoulder back up to the weekly kickoff high here, if that is in the cards. But the one nice thing is we've set up a kind of a neckline here. So we've got at least a target if this does play out. It's not really part of the play yet, but we'll be watching to see if this is going to become one of the opportunities that we start to look for. Weekly kickoff low, largely the 10% correction level. I've got it at 12,500. Weekly kickoff high remains at 13,447 to the 30-minute chart. Again, we've got some overnight longs holding in this market. Are there shorts that came in not necessarily indicated the same way they are in the S&Ps by the open interest? It is entirely possible, but we do have some overnight longs. It doesn't look like we're going to be opening with a gap. So if we can't continue to see participants pushing price higher, we may see our overnight longs in the S&Ps and in the NASDAQ give us a push down towards we might see the market, we might see these longs kind of get out and move the price back to a lower level where we might find an opportunity if we are of the frame of mind that we want to buy weakness here. And I'm starting to kind of get that feeling, particularly in the S&Ps. All right. And gold. Let's start with the daily. So volume has been pretty strong on this downside move. We've been losing open interest pretty consistently as price has been continuing to advertise lower. That's not as impressive to me as important to me as the amount of volume we've brought in for the last couple of days. Friday we lost 9,000 in open interest, so it's not like there's a lot of new shorts coming into this market. This is more like liquidation of perhaps some longs that are getting out of some bad positions. With that open interest continuing to fall, this market is going to kind of lose some of its energy until we start to see some of that open interest coming back into the marketplace. We saw a test last night pretty close to the previous weekly kickoff level of 1760. That's maybe a pretty decent opportunity for us to look for a resistance if we get the opportunity today. Take a look at the 30. The opening range was initially the high of the session, but because we opened in range and in value, what didn't look like that big of an opportunity for me, and it looks like we're taking it out now. Oh, goodness. Going to get the charts back up. We'll get through this. And here we go, and we're back. So we had some overnight longs, pretty typical overnight inventory adjustment that started in the London session. Got too long. Well, back to settlement. We've evened out inventory, and we are back in the middle of range and inside value. So again, stay patient. This suits me fine for a Monday. I think we all get charged up and ready for a big week. Sometimes we get a little wrapped up on Monday and get a little bit too aggressive. So here's the daily in the euro. really just kind of staying range bound. This 2090 level is kind of is still in play, somewhat pivotal. High volume off of that 2200 level up here. Okay, pretty decent volume, but a loss in open interest. So again, looks like we had some longs that got out right back to the center of weekly kickoff high and low, near a previous weekly kickoff level. This market is quickly falling into short time frame control. What does that mean? Short time frame levels are likely to be respected. There is going to be lots of them, so make sure that you limit your risk and choose your opportunities well. We did open with a gap to the downside here, so we are, exhibiting gap rules. Have not yet been able to close the gap. We do have some overnight shorts that possibly have reconciled those shorts back towards to close the gap, back towards settlement. But if we can't close the gap, I'm going to continue to look for opportunities to see this market push lower. We got a pretty good stab at closing the gap here. This little high right here might be an interesting opportunity for us as the day goes on to look for an entry. Now to the 10-year. We've got the daily here. So pretty good push to the downside last week. Friday, we lost another we lost 141,000, but this big drop in open interest is more likely a function of rollover. We just rolled over to the June contract on Thursday, Friday. Today, you see the volume is in there now. The yields seem to be settling down a little bit. Our equities are kind of heading back to the upside. So I'm going to really take a look here at the 30-minute chart. Well, that's the TPO chart. Let's look at the 30. So we did not close the gap here this morning. We've got settlement down here at 132. Where is it here? 132 and about 30 seconds. So we are holding possibly some longs. Maybe this was a bit of a reconcile of that. Did not close the gap. When we don't close the gap, we look for a continuation to the upside. We've got the market down pretty low here. If yields continue to maintain or even fall off a little bit, we should see some action moving back to the upside here. So I kind of rushed through these charts a little bit this morning because of that. I know you guys have had to have some suggestions here on dealing with these charts, and it just seems the computer that the charts are on is a really good gaming computer. It's got a really good graphics card in it, so I'm not sure if that's what it is. But yeah, I'm going to kind of go ahead and update the computer here and make sure that we are here in it just seems to happen randomly. Like a couple of weeks ago it was happening, then it didn't happen for quite a while, and now it's happening again. So I'll update everything and make sure that we get into what's going on with this. I see that Rational Trading Research is at Brian is talking about an 80% play, perhaps in the NASDAQ. Let's go back and take a quick look at that. If I can get the chart up here. It just went down. And come on. Here we go. All right. All right, so back to the NASDAQ, 30-minute. So what the rational investor, what Brian's talking about is when the market opens outside of the previous day's area of value, there's a probability that if the market reaccepts inside the previous area of value, which is value highs are going to say about 13,055 here. If we reaccept inside value, there's a probability that says the market could go back down and recheck the lower side of value, which is basically settlement price here in the NASDAQ, which is 12,911. So it can provide a decent opportunity. I much prefer if the market opens outside of the overall previous day's range and then reaccepts back inside value. Looks like we're going to be opening inside value. If we do open with a gap and we do accept inside value from Friday in the NASDAQ, then I certainly see that as a distinct possibility. Thanks for pointing that out, Brian. And I think we're going to be in pretty good shape here. We've got took care of a lot of business pretty quickly here this morning. Again, thanks, Brian, for pointing that out. I think we're going to take our deep breath and don't forget, there's a lot of opportunity throughout the week. I mentioned that Mondays are typically not necessarily my best trading days. It takes I sat down last night, spent about an hour kind of looking at the markets and kind of putting together my hypotheses. But I find that if I kind of wait for that first hour of trade, sometimes I'm going to miss some opportunities, but that's okay. We all miss opportunities. We're going to miss opportunities. I'm going to be looking for the opportunities that come find me. I don't necessarily like going to find opportunities. I like it when they come to me. So, what does it take to get the bazookas to go off? I don't know. You talking about like some major volatility, I'm thinking, perhaps is what you're talking about. I'm not sure. But I'm going to remind myself to stay humble, grateful, and creative in my trading today. I'm going to take a deep breath. I'm going to put the link back in here for the group coaching on Wednesday. Always love those. Those are always good, fun sessions. And trade well today. Get out there, profit. Dan will be with you this afternoon for the market recap. And we'll look forward to seeing Dan. Have a great trading day. We'll see you later.